All right. Good morning. Good morning, ladies and gentlemen. Wherever you are in the world, I hope you're doing well. I'm fired up today, probably because of the caffeine. Looking like the whole entire week may have been set up for number one NFP, or maybe even setting us up for next week. We've got a lot of things to talk about today. I'm doing a little bit of maybe an extended stream. Maybe not extended, but at least more detailed. Going to be diving into the 3-day cycle. Associating the 3-day cycle to the templates. Taking a look at the templates. All right. Good morning, good afternoon, good evening, ladies and gentlemen. Wherever you are in the world, I hope you're doing great. And we are getting in right now. Hopefully you enjoyed the little bit of a different intro song. I love the slide guitar. Here we go. Just a reminder, I am not a financial advisor. This is not financial advice. The information on this channel is provided for education and informational purposes only without any express or implied warranty of any kind, including worries of accuracy, completeness, or fitness for any particular purpose. Oh, boy. I got to catch my breath. Read through this. Pause the stream. That way you know I'm not an advisor. Let's get going. So, what I want to do is, first off, I know, your favorite part of the stream, when I start going into paint, when I start looking into little drawings, I'm progressing. We're going to go from paint to playbook drawings to playbook maybe, and then we're going to look at some chart examples from a slideshow that I made back in October of 2024 and earlier. All right, taking a look at the 3-day cycle. So, way back in the 50s, there was a gentleman named George Douglas Taylor. He was a pit trader, and he observed some things. He observed large institutions running the market up in a cyclic pattern in one direction for a day or two, and then essentially reversing the market and then continuing to trend or reverse the market in a cyclic way. He called this the 3-day cycle. Since then, there's been lots of other things, a lot of other systems that have incorporated this cycle in different forms and variations, whether it be BTMM, whether it be Stacey Burke. However, we can all agree that the market moves in these 3-day cycles, and there are certain templates the market will create associated with these. All right, so the 3-day cycle, and talking about the George Douglas Taylor variant, would be they force a low or a high. This is going to restart the cycle. So you've heard me talk about forcing a previous day's low or a previous day's high at the high of the current week. The most important thing is that they have forced a previous day's extreme, or force an extreme in general. We could be looking at a previous week's level, and then when they force that and it fails, that is going to usually be considered a buy day or a sell day on the opposite end, or the reversal. And this is going to be a day one of the cycle. And then on day 2 of the cycle, it was observed that they typically will trend away from day 1 highs or day 1 lows. And that is going to be the day where, let's say that this was a buy day. His idea was that you would buy the close of this day, and on the rally, you would look to sell. So this would be your sell day. This would be the day that you exit your long position on the rally. And then on the next day, he talked about, or said, that this could be a sell day, a day that has now gone up and forced a new extreme. And then you would sell the close of this day and buy back your position on the decline. Now, is it always going to be that variant of the cycle? Of course not. Or else the market would just stay ranging forever and ever. However, there are templates that we can observe and templates that we can find based off of this cycle. This is probably going to look very similar to some of you, as maybe we're in an up moving market, and maybe they triggered previous day's low, pumped it up, closed in breakout, and on the next day went vertical to the downside. What does that sound like? Well, that kind of sounds like the pump and dump setup that Stacey Burke talks about. It also could look like the 3 levels of rise, BTMM. Whatever. It doesn't matter what system you're thinking about. Just think about this this pattern in general in the cycle. All right, so this would be a reversal template. Now, there's also going to be instances where maybe they break out to the upside like this. Maybe this is the first day that they've broken out to the upside. So maybe this was day one of the cycle. The market's been going down, but then you maybe get your buy day. So like a first green day, right? You get like your first green day. And then you get like a breakout day one to the upside. Well, what kind of template are we looking for now over here? Well, instead of the pump for a dump template, maybe now we're looking for a breakout day one, breakout pullback, trend continuation template to the upside. And these same exact templates in the same exact cycle tends to repeat over and over again. And that's why it is so effective. So let's get rid of paint because I know how much you all love that. We're not going to save this. No, thank you. And then we're going to take a look at the news real quick. Actually, you know what? No, we're not, because that's going to screw up my line of thinking. I'm going to put this over here. Goodbye, news. Okay, so take a look at these drawings. I know a lot of you here have seen this a million times. That's fantastic. I like to do a little bit of recap every single one of these streams, so that way when I go into the analysis process for the day, maybe it makes more sense. Especially for everybody who's new to the stream. And if you are new, make sure you're saying hello, and hopefully the stream is helpful and useful to you. So breakout trend trades. Well, that kind of sounds like maybe if, for example, we had a 3-day cycle, maybe a first green day, and then a breakout day, and then this is the trend trade, breakout day one, maybe even breakout day two. A market that's in breakout could be trending to the upside, so we might be looking at that sort of 3-day template. We could have a 3-day. We're going to look at this here in a second. This variation of 3-day cycle, but also more importantly, the template that comes along with this variation. Peak formation high, peak formation low. Looking at the 3rd day or the 4th day, looking for a 3-day rectangle because the market is only going to do 3 things. And whenever you come out of these larger rectangles, usually there's an expansion of this range, and that is why this is one of the setups. Usually this could be a very strong move, something that should not be counter trend, and usually they'll be very simple and easy, explosive moves. You can get in, stay in for an hour, get out, get in, get out in 5 minutes. It doesn't matter because usually they explode very strongly. This should look very familiar. First red day, first green days, buy days, sell days, right? Day 1 of the cycle, day 2 of the cycle, day 3 of the cycle. 3-day cycle, right? But also using this, if you don't like the 3-day cycle, just understand the pattern, and a lot of things will become a lot more clear to you. So we could have, maybe there was a peak formation. They triggered previous day's low over here, restarting the cycle day 1, and then you get the breakout day, and then you get your first red day, and then you get your reversal back down to where the pump began. That could be a variation. All right? Context is always very important. But overall, looking for first red day behavior, a day that went a large range day. They opened, they pumped it up, they lifted price, they forced people to buy up high, could have broke out. On the 2nd day, they attempted to go higher, they failed. And then on the 3rd day, or maybe even sometimes the 4th day, looking for that reversal trade back down to where the pump began. You take this, you flip it over, you have a first green day. 3 days of breakouts. Some of you come from a more of a BTM background. Good stuff. 3 levels of rise. 3 weeks of rise. 3 days of rise. Ending in a 1, 2, 3, the 33 trade. You can find all kinds of variations of the 33 trade pretty much every single day. 3 levels of rise or fall. Ending in a 1, 2, 3 pattern. I talk about the 3 push patterns all over my channel. 3 levels of rise. 3 pushes. Ending in a peak formation at the high of the day, high of the week. And that reversal, I'm usually looking for the front side of the move to have been broken. But at the very least, on the day, I want to see a market. Let's say that I want to go short. I want to see a market making lower lows and lower highs. If I want to go long, a market that is making higher highs and higher lows, looking for a long squeeze pattern and looking for a short squeeze pattern. And then we have inside bar trades. Inside bar trades being the previous day was an inside bar. I'm looking at the context of the market to determine what kind of 3-day opportunity it might be. We might have a inside bar reversal trade where maybe we've been going up. We just saw one of these yesterday on pretty much all of the indexes, okay? So if you're confused about this, I'll look at the indexes and we'll take a look. We have an inside bar, and then they trade back up or down into the previous day's high or the previous day's low of that inside bar. And then you get a reversal back to the other side of the range. Or we could have a trend trade opportunity where we're maybe in breakout in a direction, and then we get an inside day, basically like a pause day, and then the next day looking for that trending opportunity. Now, I understand that those have nothing to do, or you might think they have nothing to do with the 3-day cycle, but everything revolves within the 3-day cycle, whether you know it or not. Okay? You don't even necessarily need to worry too much about the 3-day cycle. You don't have to sit around and be like, oh my gosh, because that's part of the reason I don't talk about it as much, is because what I have found is people start obsessing with, well, what day is it? And that becomes the only thing they can see. And then that stops you from actually seeing this pattern. And these patterns are what is truly important. Within these patterns is the 3-day cycle. But just because I don't know what day it is doesn't necessarily mean I'm completely lost. And hopefully that's making sense. This, as long as you can identify these patterns within the week, or just over the course of 3 days in general, you're probably going to do just fine. So I want to go and we're going to take a look, and I'm going to start here. I've left myself a little note. We're going to start with reversal templates. So reversal templates, what could these look like? First red days, first green days, markets that have been going in one direction, and then they reverse, either coming off of the high of the week, coming off of the low of the week. So what are some indications that could indicate to me that one of these is going to take place? Number one, let's say market go up. Okay, market go up, and then maybe a Monday or a Tuesday or something like that, right? So maybe we've triggered the low of the previous day, but also we're at the low of the week. Okay, and then from this point, that would restart the 3-day cycle. So we have a new week, or maybe we're just at the low of the current week. We start the cycle, day one of the cycle, and then we pump it up. All right, now we're in breakout to the upside. So we're day one, day two of the cycle goes vertical to the upside. But then on day 3 of the cycle, we're looking at the market and we say, okay, this is where the pump has began. There's a potential or a possibility for reversal because of this. So on this day, on day 3 of the cycle, if they start making lower lows and lower highs, I know, hey, I've got volume trapped at the high of the week. I know most of you in here have probably seen my explanation of Wyckoff cycle, whatever, right? You can explain this stuff 1,000 different ways. 3-day cycle, Wyckoff, BTMM uses Wyckoff. It doesn't matter. So we have the buy day, or in most cases, this would be the accumulation day. And then you have your markup. And then you have your distribution. And then now we're looking for our markdown. Once we start making lower lows and lower highs, we can go back down to where that pump began. All right, 3-day cycle reversal templates, coming off of the high or the low of the current week. Hopefully you all are following along. If you are, please type 1 in the chat right now. That way I know you all are with me. You're not asleep. Everyone's mighty quiet today. Morning, Clifford. K.E. Futch. Good stuff. Heck yeah. So I've left this up here. Pretty much everything that's up here right now is kind of what I was just talking about. Let's go down. We'll take a look at some examples. I made this slideshow back in July. Oh, wow. I don't know if I made it in July or if this example was just from July. Okay, but this is nothing's going to change is what I'm trying to get across, right? This stuff has been doing the same thing for years and years and years and years. It's going to keep happening whether you see it or not. Might as well get on board, right? And it becomes very simple once you see the patterns over and over. So, okay, peak formation, low of week. Think about Wyckoff. We could consider this our accumulation. And then we get our 3 peaks. So we have our markup. We go into an uptrend. We break out of the previous day's high. And then once we get up here, we attempt to go higher. We break down. We start making lower lows and lower highs on the day. And then we go vertical back to where that pump has began. Now you might say, well, this is cherry picked. And I would encourage you to not take my word for it. Go back and try and find these patterns on at least 2 or 3 pairs per week Sometimes you won't get the reversal pattern. Sometimes it will just be a trending week, which is what we'll talk about here in a second. But this pattern is incredibly powerful. All right, here's some examples on the day, what to be looking for, what I would be looking for on the day. I told you all I have a very objective way of looking at structure. I have a way of determining, hopefully my mic didn't just cut out because I think I bumped it. If you all can hear me, let me know. If you can't hear me, please tell me so I can fix this mic. It's been giving me troubles and sending me in a tilt all week long. We've got the higher highs and higher lows on the day. I don't want to be counter trending something that is still going higher. So what I do is I have objective ways of viewing structure, and then I let the market break down on the day, and then I look at coming into my session, where's the high and where's the low, and then I use that as a determination. So for example, this market has broken down, we've made lower lows and lower highs, and then I look and see, how did they come back up? We've kind of got this little 3 peaks pattern. 1, 2, 3 to the high, ending in a 1, 2, 3. And then in my session, it breaks down. And then once they start putting the shorts back into profit, look at this. It breaks down, EMA. So this is a breakout, right? They broke out of the EMA. Breakout, goes sideways. Every single time the market breaks out or breaks down, it's going to go sideways. This happened yesterday during my trade. Breaks down, goes sideways. This is going to scare a lot of people out. It's going to get people to start going long. It's going to get people who are long to hold on to their positions. The next bar should go vertical. All right, within the next 1 or 2 bars, it should go vertical. That is the behavior that I am searching for. Okay, day 3 reversal. Here's one on the other end. So a market has triggered the previous day's high at the high of the current week, resetting the cycle, day 1. We get a breakout to the downside. Now, remember what I talked about, the breakout level. Always project those across. Why? Well, there's somebody has traded the breakout of this day, which means that they might be at break even. They have stops at break even. There's money sitting here. Where's the money? Target the money. Day 2 trends away from day 1 highs and goes back into consolidation for day 3, which then gives us a short squeeze pattern. So on the day, they've made a higher high and pulled back, and gives a short squeeze pattern at the low of the day back towards the money, back to where that dump began. All right, so this is that chart, but on a lower time frame. I'm almost certain this is not a 15-minute chart, so we can just scream at me later. You could put it in the comments how silly I am. 5-minute chart. All right, they made a higher high and dumped it back down in 3 pushes. And then gone into consolidation. 3 pushes is very subjective, but the time of day is not. The clock. Okay, over here, look at this. What time is this? 9 o'clock, 9:30. This is US 30, so definitely focusing mainly on that 9:30 time. Breaks out, goes sideways, and then continues to run. All right, those are just a couple of examples, but these are the reversal templates. Trend templates. Okay, way back when? September, October. This is oil. Okay, so a market that is in breakout. We're going higher. We're going to pull this up real quick. This is why I love this playbook, because it associates everything in a much more simple term than day 1, 2, and 3 of the cycle. It's just depending on what type of day I'm looking at. So we got the first green day. We got first green day traps. Let's go down and take a look at first green day traps. I take that back. Let's go down and look at first red day traps. Okay, here's one variant that I look for. We have a breakout, then we have a first red day. This is resetting the cycle. We're at the high of the week, day 1 of the cycle. The next day goes vertical to the upside. That's one variant that we could look for. However, on this, what about this one? Day 1 of the cycle, we've broken down off the high of the week, and then the next day doesn't do what we expect. They break out to the upside. Okay, day 1, day 2 trends away from day 1 lows instead of away from day 1 highs. That's unusual. And then the next day going vertical to the upside. Breakout that fails, giving us first red day, day 1 of the cycle, peak formation high. The next day goes and breaks out to the upside. That's a little strange. We're making higher highs and higher lows on the day. And then we get the vertical continuation coming off of closing price from the previous day, just as it should over here. Nothing has changed. Nothing ever will change. All right. This is why the playbook is so effective. Knowing exactly what to look for on the day. We have a stop hunt to the low, 3 levels of drop, the higher high, and then the 3 push pullback. So notice how once the higher high is formed, I think somebody asked me yesterday in the comments on one of my videos, when do you look for 3 pushes? Structural breaks. All right. I look for structural breaks and then 3 pushes back down to help gauge where to get in. Look at this. Higher high, big bar, convincing. Big bar, other traders start getting in a pause. Biggest bar on the chart, people get in at the worst possible place and the market reverses. Then we get our breakout, our sideways, and our continuation. Okay. Okay, this could be kind of like what we just talked about, but in reverse. All right, so notice how market go down. We get a first green day. That's kind of what this looks like, right? Market go down. Market give us first green day, day 1 of the cycle. Then we have a breakout day the next day. Breakout day 1 to the upside. And then we're looking for 3 levels of drop. The market to start making higher highs and higher lows. And a vertical continuation or a trend trade. Project these levels across. Hey, Gil, I posted all the time here in the live streams. But if you want the full PDF, you can one of those links down in the description. It's a part of the boot camp. Let's see here. Okay, Russell. So this is a good picture description. Breakout to the downside that fails. Maybe a first green day. Then we have a breakout day 1 to the upside. Day 2 trending away from day 1 lows. And a breakout day. Project that level across. And then on the day itself, this is going to happen fairly frequently, okay? And this is where I talk about the evolution of the template, seeing what you want to see, and knowing that sometimes the trade will come in a previous session instead of your session, and being aware that, hey, just because the move has already taken place doesn't mean I have to take the trade in my session. Sometimes this setup will occur or start to develop, and then the trade will happen in either Asia or London, and then I have to miss out in New York because it's not set up appropriately anymore for me. But in this case, we're making higher highs and higher lows and breakout to the upside. Would I have personally taken this trade? No. We're already in breakout to the upside. We didn't break out and pull back to my level. So it didn't present the way that I needed it to present, but the template is still intact. All right, this was good for like Asia or London. Mostly it looks like London. All right, higher high, measuring down 3 levels and looking for the continuation if it presents. Okay, 3-day rectangles. We're not going to talk too much about this, but this is one of the trending templates. All right, market and breakout to the upside. Peak formation low, peak formation high, 3-day rectangle. I know that was the least straight line I could have ever drawn in my life. It is what it is. Peak formation low, peak formation high, consolidation in the middle, starting to ascend and make higher highs and higher lows. Base 1, base 2, base 3 going vertical to the upside. Okay, so again, go back to the, here we go. Holy cow, where am I? Outside days or the peak formation high, heartbeat patterns. You can even look at the, you can just look at this. Oh, where am I? All right, one of these variations. Peak formations over the course of 2 days. Okay, so I have gone very in-depth right now for about 30 minutes on the 3-day cycle, as well as what to look for as far as what templates we are in search of. Now, I'd like to go real quick and do a quick pause. Get rid of some of this stuff. Let's pull up that news real quick because I want to just talk about the schedule. This whole entire week, possibly setting up for, hopefully you all can see this. Do I need to zoom in? Oh, I can't zoom in. Nice. All right, so this entire week may be setting up for Friday, right? We have non-farm payrolls today. And, we've got a lot of other news and stuff, 8:30, which is in 5 minutes, so I'd like to get to the charts. Maybe we can take a look at that. Fed Chair Powell speaking at noon, which is concerning because that means that if non-farm breaks out, pulls back, goes back into consolidation, there's a failed breakout, the whole day might end up being a wash because the market's going to wait for this guy to come on here and he'll say hello and then the market will go crazy. It's ridiculous, but just going to point this out because the new schedule has a really big impact on my decision-making process. Non-farm payrolls, normally I would say, okay, what was the template over the course of the last 3 days? And then after non-farm, what does 9:30 look like? The open. What does the market open look like? Am I able to trade that 3-day template now that the market is open? However, with this guy coming on here and saying words, literally could say anything and it's going to affect the market at noon. I have to be concerned with the market going back into consolidation after the open, after non-farm, and then just waiting for him to say words. So everything that I'm about to say about the 3-day templates, please keep that in mind. Again, I'm not a financial advisor. Don't take this as anything I'm saying as advice. This is all for education, as always. However, I just have to point that out. Good stuff. Let's get to the charts. Hopefully I have one pulled up. I do. Nice. I'm going to talk about my US 30 trade yesterday. There was so many people yesterday I saw in Discord that took the inside bar reversal. And all I have to say is, heck yeah. Good stuff. I'm so glad to have seen so many people taking that. I did not opt to take that because I had taken the low-hanging fruit or the trend trade because it presented first. I took that first, and then immediately after I got out, it went vertical, and a lot of people took this inside bar reversal. Heck yeah, love to see it. So let's talk about this. Why did I see this? How did I see this? What made me want to take this trade? I actually rated myself 8 out of 10 yesterday, maybe even pushing 9 out of 10, and I'll explain why. Okay, so we've dumped down from Monday. Peak formation high, maybe a reset of the cycle, down here. But overall, we're in breakout. We're in a down-moving market on Tuesday. And then Wednesday takes place, and we're still in a down-moving market, okay? All right, project that breakout level across. Maybe Wednesday was a first green day. However, on the day, we start breaking back down. So the breakout may be succeeding to the downside. This is where the pump began. This is where I'm going to target if I were to take this trade. Now, the market had broken down coming into the session and gone back into consolidation. All right, let's throw up some sessions real quick. So in the session, this was coming into and is 9:30. We start to break back down, and then we break out 9:30. We break out and go sideways. I put a sell stop 1 tick below this bar on the breakout. I got triggered in. It pulled back and went sideways. Now, this is what I'm talking about when I say sometimes you just have to be really careful as far as don't get afraid. Don't be afraid. As long as the trade is still valid to me, we've got longs trapped above this area. This is the best fill area. And ultimately above here, we've got longs trapped. So unless those people start getting let out, this trade is still valid to me. Okay, so we got the little breakdown, go sideways bar, and then the trend follow through continuation. I took a bulk off at previous day's low in case this were to take place. And ultimately, I was holding for where that pump began. So once my first take profit was hit, I moved my stop into profit about 25 to 30 ticks, and then I got taken out on the next bar. So I rated myself 8 out of 10, pushing 9 out of 10, because if you look at all of the other pairs, this was the best trend continuation on the day. So I was able to, out of all the other indexes, identify the one that was set up the best. Execution was 10 out of 10. Trade management, I think, was 10 out of 10. The only reason I think the entire trade was not 10 out of 10 is also I sized the trade appropriately, so that was 10 out of 10. The only reason I didn't give myself the full 10 out of 10, I think, is probably because I did not take the inside bar reversal. All right. But on this trade itself, that was pretty good. I was happy with it. All right, let's get into today. We're going to go and start discussing what 3-day templates we're in. All right, we've got about 30 minutes. The non-farm just released, so let's take a look. Holy cow, nice. All right, so giant vertical move, giant vertical move, giant vertical move, giant vertical move, oil, no reaction, natural gas, gold. All right, let's get into 3-day templates. Okay, Wednesday was an inside day or an inside bar. This is on the NASDAQ. I'm on a 15-minute chart. You can do your analysis on a 1-hour chart. It really doesn't matter as long as you have previous days high and low. Yesterday was a breakout day. Okay, so now we've had 1 day of breakouts, 2 days of breakouts, 3rd day of shorts triggered into the market yesterday on the NASDAQ. All right. Way back here on Monday, we triggered the previous day's high, and we've dumped the market down. Is that where the market has began to dump down? I don't know. I am going to toss this up here just in case. That is the high of the current week. We are currently at the low of the current week. We closed yesterday in breakout. The market only does 3 things: breakout, pullback, trend, breakout, reverse, or stay in a trading range. I project this level across just in case. So right now we're at the low of the week. We have 3 days of shorts in the market, and we're at levels. If we start making higher highs and higher lows coming into the New York Open, my question to myself will be, breakout, pullback, trend. We have inside bar traders trapped at the low of the week, trying to trade the inside bar break. They have put their stops at the previous day's high or at the high of the previous day. Okay, so that is where the money is. If that trade setup were to take place, that is where I would target. On the flip side of this trade, we are in a down-moving market. The market has been breaking out on a weekly scale to the downside. Lower lows, lower highs. Previous week's high has not been triggered. We just keep going and breaking out lower. The market only does 3 things: breakout, trend, reverse, or stay in a trading range. Peak 1, peak 2, peak 3. This is where the pump has began. 9:30 opens up and gives me continuation signals to the downside, looking at the high of the day, going back towards where that pump began. That is the setup. That is the playbook opportunity if it were to present. Are we all on the same page? If you all understand what I'm talking about, hopefully you do. Please type 1. If you don't, please type 2, and I will give you a better explanation. If I see any 2s, I'll come back. US 30. Okay, yesterday, US 30. Oh, man. Okay. Man, what are you confused about? What part of this is rough for you? I'll wait for your answer and I'll come back. US 30. Okay, we're in breakout to the downside. Wednesday was a first green day. It was also an inside bar. Okay, so I'm going to project the low of this inside bar across, which you can see here. We've triggered it. Spike to high, peak formation low. We're sitting on the inside of a range. That's okay. All right. Now, we are still in breakout to the downside, so what I'm going to do is I'm going to project this across. We've gone into consolidation between the breakout level and the low. Okay, day 1, day 2, and day 3. All right, so pretty much exactly the same as the NASDAQ in a sense. Peaks, peaks, peaks. We can't go any higher. Although I do think I like the NASDAQ a bit more. We're also in breakout from last week's low. Got you, man. Yeah, so Mayman, if you have not watched a lot of my videos on my channel, this stuff is going to be, you're going to feel very overwhelmed. But it's good to just start getting the thought process down. So if you want to keep watching this, heck yeah. And then hopefully, if you watch more and more of the streams, watch more of my long-form content videos, and then come back to these streams. Watch more of the long-form content videos, come back to the streams, and you'll start to understand what the heck I'm talking about. Hopefully. All right, let's go to another index, maybe one that is setting up a little bit better. Yesterday we had day 1, 3-day cycle. Not a buy day, though, just day 1. We had a breakout that failed. Third day of long or shorts triggered into the market. Day 1, day 2, day 3 of shorts triggered into the market in a down moving market. Okay, this is the same thing as NASDAQ. I'm not going to waste you all's time. It looks exactly the same. Take a look at the Russell. Okay, the Russell is fairly similar. This is also not triggered previous day's high, except for on Monday. We've dumped it down from Monday after triggering the high. 1 day down, 2 days down. We're kind of actually missing the third day of shorts triggered in. Okay, I think that out of all the indexes, the NASDAQ is the most clear. In my opinion, the NASDAQ is the most clear. This is the one I'll be watching out of the indexes. Why? The template's the most clear to me. Peak formation at the high of the week. We've dumped it down for 3 days. So we have 3 days of shorts. We had the inside day telling me that, hey, those inside bar trader stops are up there. We also have where the dump began. It's very clear. On the flip side of that trade, I also understand that we're in a down moving market and we have 3 peaks, and this is where the pump has began. If that setup were to present to me, I know what to look for. So that's why I'm going to be watching this, because out of the indexes, it's the most clear. Let's go and take a glance, take a little gander at oil. And I have failed you all by leaving my stuff up there on the screen from later or from earlier. All right, so similar to the NASDAQ, how at the beginning of the week, we put in a peak formation high above previous day's high and started to go lower. So that reset the cycle, day 1 of the cycle. Day 2 of the cycle, except we have peak formation high, peak formation low, reset. And then we get day 2 trending away from day 1 highs. Ultimately, the big thing, the big takeaway from everything I just said was Wednesday was a breakout day. Okay. Wednesday was a breakout day. We closed in breakout. Yesterday was an inside bar. We have gone from this inside bar right here, peak formation high, peak formation low, and we've gone back and now triggered the previous day's high. The market is only ever going to do 3 things. We started up top. We've came down. Okay, we broke the front side of a move. We've broken out. Push 1, push 2, push 3. Push 1, push 2, push 3. Don't really know which one we're going for. However, yesterday was an inside day, so we had where the dump began. Inside day. Was this the first screen? No. Let's go back. Let's go over here. Okay, so look at how the market has moved up to this point. Level 1, push 1. Level 2, push 2. Level 3, push 3. Trigger previous day's high. This is a breakout. Maybe we're looking at breakout pullback. I don't know. Okay, but this at least gives me something to look for. If the market starts making lower lows and lower highs, I know to look for the trend trade back to the other side of the range for the money. Actually, I would target the low of the week, ultimately. Or this inside day, this is a breakout, and we might be looking for expansions of the range back up towards the upside, which ultimately or realistically would put us about right there as a good target. Okay, real simple stuff. I only have two options. It's either a reversal or it's a trend trade. All right, we're in breakout to the upside. This becomes the bottom of my box. All right, the previous day high has just became the bottom of my box. The high of the day is the top of my box. What time was this? Okay, this was 7:50, so this is the high of the day before the session began. This is the top of my box. This is the bottom. We're in breakout to the upside. I look for them to either start making lower lows and lower highs, and I look for that trade back down towards the low of the week. Or we're in breakout to the upside. I look for breakout pullback and an expansion of the inside bar back up towards the high. All right, hopefully that's making sense and very clear. Or I do nothing. That's a big one. I could just do nothing. Let's take a glance at natural gas. Oh no. Oh no. Hey, how about you let me... There we go. All right, so I've got some annotations up here from beginning of the week. All right, we had a big breakout on Tuesday. This was at 3 levels outside of a breakout on a Tuesday that I have told you all. Oh man, this is... Go back and look at the slideshows that I've got up for basically everything that I've said, but I put it in word form. One of those things, I think it's bullet point 5 on the tips and tricks slide. 3 pushes or 3 levels outside of a breakout on a Tuesday. I really dislike when this happens because this is exactly what could happen. We have a high, we have a low, and then there's too many possibilities or probability throughout the week. And this is the one that, this is like worst case scenario. It just goes sideways and keeps chopping back and forth between a high and a low all week long. Okay, so now we've had the inside day on Wednesday, a double inside day on Thursday, and then now we've triggered the low. Okay, so are we breaking back down? Or pretty much the exact same thing that I just said on those other instruments. Are we triggering the low of an inside bar to go back to the high of the week, dump it back down for a pump back to the high of the week? Or is this thing about to make... John, I got to be honest with you. I don't know what that says. Or is this going and making lower lows and lower highs? Are we going back towards where the pump began from Monday? Okay, we got a peak formation low on Monday, day 1 of the cycle. Day 2, we've gone sideways. Okay, you can kind of see there's a little bit of a vision here for the pump for a dump template if this were to go vertical. Okay, we got a lot of space to get back down to where that pump began from Monday. We also have a lot of space to get back up. I really like natural gas today. This is, I don't say that very often, I don't think. But this is another one where the template feels very clear to me. Peak formation low, peak formation high, consolidation in the middle, and a descending channel. I think this might make the list today. I've got the NASDAQ so far. I'm a little iffy with oil. I know I had lots of words to say about it, but it's not necessarily my favorite. But I think natural gas right now has made the list. All right, gold. Boy, what a consolidated week. Goodness gracious. We have not triggered a previous week's high and low, or high or low on gold. That's going to be a big part of the details, I think, for me on gold. Is this how the week is going to end? Are we just going to do this like this? We haven't triggered a previous week's level, so we're on the inside right now. We've been in breakout to the upside since Tuesday, and they've been holding it up here. Okay, so one thing I am noticing is the template. Peak formation high on Wednesday, peak formation low on Thursday. I can work with that. Joseph, good to hear from you. So this is peak formation high, peak formation low. We've been in breakout since Tuesday. We've been in consolidation Wednesday, Thursday. This is that 3-day rectangle. And then we've pumped it back up now towards the high. I think gold's going to make my list as well. At least something to watch. Is silver any better? Okay, with silver, we had the peak formation low being put in on Friday of last week. We broke out on Monday, day one breakouts. So day one, day two, day three, 3 peaks to the high and a reversal back down, but not necessarily back to where the pump began, but at least back down to the low of the day. So there's the day one, day two, day three template. And then we've continued to break higher. So breakout day one, breakout day two, breakout day three on Wednesday. We got 4 days of longs triggered into the market. They've came back down. They triggered the previous day's low. All of you should be screaming at this point what that could signal to you. Number one, this could signal a pullback. This could be the lower low. We've triggered the previous day's low. They pump it back up 3 levels, go sideways into the open, and go vertical to the downside. And I would be looking for to take profits at the low of the current day, but ultimately an expansion of the range. Average stop on outside of a range, 25, 50 pips, or just looking at previous day's levels. The other side of this could be the fact that we have the peak formation high, and now this could be our peak formation low, and now we have consolidation in the middle. It could be a trend trade. I probably wouldn't take that. I like this thesis. This is good. Do we have that on this as well? No. I don't usually trade silver, but I might take a look at it. All right, Bitcoin. All right, this is another one that has not triggered previous week. Can you all still hear me? I feel like